Hello friends, this is our Black Friday deal running through the weekend. 20% off individual courses utilizing the code listed here, as well as an additional 10% off the already 20% off bundle of both courses together. A lot of people are still waiting to get into the chat room and live stream community, and those that finish the courses get automatically added to an express list. But once you are on that list, you still need to go to the website membership page and sign up in one of the two spots that open up each day. Now, last week we had a day where both spots did not get filled. So you need to go to that website and stay persistent, stay patient as we are doing this to ensure that we do not flood our chat room with new people, new questions. We're trying to keep it as productive and as efficient as possible. So keeping it to 2 people a day does that. We appreciate all the support. Let's get to the charts. Hey everyone, checking in on commodities here, and before I get going, I'm going to be focusing on oil pretty significantly with my trading over the next week or two, and the reason for that is because it is so beat up, as we will see. But I do believe that oil is going to be the potential indication that market weakness and our market low is going to be hit. That's something I'm keeping an eye out for, because in the past, we've seen oil be an indication of when SPY is going to rally. And just off the top of my head, 2016 in February, we had weakness. This is the S&P 500. This is the end of 2015, start of 2016. We had some weakness where we had a very significant long-term uptrend. We saw an all-out dump. The bulls attempted to recover, could not do it. Then we ended up having a double bottom, and it was a double bottom by 7 pennies down here, and then the bounce got going significantly, and the bulls were able to follow through with that. So that occurred in January and February of 2016, and at that point in time, it was a tweet about oil that gave this double bottom on SPY. Right when we were about to break down, an oil tweet came out, and the bulls just rocket shipped up over the next 2 months in a row. And we're watching now, or actually I should say comparing oil back then as well. So the double bottom on that weekly time frame for SPY occurred right here, February 8th, 2016. And we look at oil, and the low was February 8th, 2016. We had been bearish for months and months, pretty much a year at that point. And we then saw the low hit and multiple months of upside. So we saw a bounce where we went almost 100% on the price of oil. And in that point in time, that's when SPY saw a very significant bounce of pretty much 10% plus, more than that, 15% in just a few months as well. So we are seeing similar action right now, with SPY seeing a lot of weakness, as is oil. And let's just fast forward to where we stand right now. All this weakness started 7 weeks ago, 2, 4, 6, 7 weeks ago. This was our huge dump candlestick that made us know something was up with the market. And we look at oil and where we were 7 weeks ago, and that's exactly when the dump started. So I'm watching for the signal of oil bouncing. And again, it has to just be more than a weak little bounce here. The daily time frame has been giving us plenty of bear flags, but we need to see a legitimate bounce on the weekly time frame, which we will anticipate is just going to set a lower high. But in my opinion, that bounce is going to potentially temporarily mark the bottom in the market as well. So the dollar is going to be a factor, because dollar weakness is only going to help the oil bulls. Again, there's a inverse relationship between the dollar and commodities. So if you are seeing a commodity and you want it bullish, ideally you want to see the dollar with some weakness. But right now we don't have that, as the dollar keeps setting higher lows. The weekly time frame support 95.68, and we just formed a higher low at 96.04. This is the strongest close on the weekly time frame that we've seen on oil at any point over the last year plus. And we're just looking up at resistance on the daily time frame, the recent high up at 97.68 or 97.69. So we have clear daily higher lows here, and if those are lost, it will be an initial red flag for the potential of weekly consolidation. But the bulls ended the week pretty strong, and again, it's the highest weekly close we've seen in a long time. So unless we see a complete shift in momentum and turn around and lose the daily uptrend, which is possible, I'm watching this head and shoulders pattern with the left shoulder, the head. Maybe we're forming the right shoulder right now. So that's why that important support level of 96.04 is going to be on watch for the rest of the week. So other than that, short-term bulls have control, but we're watching for a break of that support to indicate a difference or a shift. So the gold weekly chart has its higher low established at 11.96, but now it's looking like it's forming a lower high compared to 12.43. So I would anticipate that gold's going to trade within this tightening range for potentially another month plus. And the daily time frame, we can see the bulls losing a little bit of momentum. They still have a higher low pattern. There's a base of support down here, 12.20, 12.19, and 12.20. If we're just rounding, it's 12.23 times. If we break 12.20, we're going to look for further consolidation into this zone in the lower 1200s, and that's going to give us our weekly lower high and tightening range. So we would then look for a higher low. If we do break 1220, the bear miners will get some follow through, but we would look for a higher low to form on the daily chart and that tightening range to play out. Looking at miners, the senior miners are very clearly holding up better than the junior miners. We have support down here on GDX at 1826. Resistance is up at 2051, and we're looking like gold potentially setting that lower high. The daily time frame is maybe topping out a little bit, and if we lose this daily higher low pattern, we'll say our weekly lower high has been set, and then we'll look for the tightening range here as well. So support is 1927 and 1897 after that. And again, we could stay within this weekly tightening pattern for another month plus potentially. So GDX had a much weaker end of the week, and you can see that we just have less space to work with. We dropped down right to this support level down at our lows, whereas GDX stayed a pretty good bit, over 5% above that level compared to where GDXJ dropped to. So it's a very similar pattern. It's just much weaker. We're nowhere near breaking that resistance. A lower high is looking like a potential little bear flag on the weekly time frame. And we can see the most important short-term support is 26.92, and then we're right back down at those lows. So if I'm playing the miners bullish, I want to be playing NUGT because it's trading based off of the senior miners here. And if I'm playing the miners bearish, I want to be playing JDST to play the junior miners bearish because they are seeing a bit more weakness. So oil had all my attention on Friday, just yesterday, with the half trading day, and did end up getting a nice trade off of that for the bulls. We had a couple little pops here where we saw a 2% move in just a half hour, and then we saw at the end of the day in the last 10 minutes a run up there, and I sold the last of my position on UWT on that spike just so I could lock in that profit because I'm trading against the trend, and I want to have a fresh clean slate on Monday to be looking to play this oil bounce again. And at this point, I'm watching for the potential of a climax under the $50 psychological level to be an indication of the temporary bottom, and we closed right at the low of the week. And there's a lack of support nearby, which is another reason I don't want to be in a bullish position over the weekend, because we very easily could see weakness on Sunday with the next support level down at 49.13 after 50 psychological. So again, it's a huge dump, 7 weeks in a row. We know an oversold bounce is coming. In my opinion, we're going to see oil bounce roughly 15% or so, just a visual estimation of what even a fairly weak lower high would be. If we bounced off 50, and a move to 57.50 would give us that 15% bounce, and we could still just see, a weekly bounce and a lower high being set. If the market's going to rally and we need a full recovery, we're going to have to see a significant bounce and then a trend change on the weekly time frame to get follow through. Keep in mind there's headline risk, as Trump keeps tweeting about, wanting cheap oil and how that's a discount to the American people, which, he wants a strong stock market as well, but not really sure he realizes what kind of impact that this weak oil is having on the market as a whole as well. Either way, keeping an eye out for the bounce. What's going to be the first indication? A change of the 4-hour trend will be an early indication. You can see these exponential moving averages. These are the 12 and 26 exponential moving averages, and we haven't really turned them into support in any meaningful way on this entire pullback. And we're also watching the crosses of the exponential moving averages. They've been pretty good in terms of the follow through after a bull cross, and now the follow through after the bear cross. We got the bear cross on the 4-hour time frame, and we have not seen a bull cross since then. And that was a long time ago that bear cross occurred. So more patient traders are going to wait for the 4-hour trend to change and going to wait for the bull cross of that 12 and 26 period on the 4-hour time frame. Again, you're not going to nail the bottom if you wait, but you're going to eliminate a lot of risk waiting for that shift in momentum. Other traders are going to be more aggressive, probably myself included, and look to try and position ourselves where, say we got the $50 flush down, I would enter into UWT positions, and then once the bounce gets started, I either lock in that short-term profit or I set my stop loss at break even and hope to nail a longer-term move, which is probably the route that I'm going to take here at the end of the year. I'm going to be fairly conservative after having a good year in 2018. So I might just set break even and hope to get some follow through. But either way, I'm going to be watching oil every single day for the next however long it takes for this bounce to get going. And on the daily time frame, any bounce that we do get going, anything under 57.93 is just going to be a lower high. So we're not going to change this daily trend anytime soon as well. And again, these exponential moving averages have had some decent follow through crossing on the daily as well. We got the bull cross on the daily. That occurred in the upper 60s, and then we went, up into the mid to upper 70s, and then of course the bear cross with all this follow through. Daily RSI levels crushed, weekly RSI levels getting oversold, and that's why we are interested in oil. Natural gas, weekly inside bar. So we're going to watch for how this breaks. This is still NGF 2019. 415 is support. 487.5 is resistance. We're closer to support than we are to resistance. We're looking at the daily time frame, which gave us a little break of support. We had the high, low, lower high, higher low, bull break with no follow through, and then a break of support, and then an upper wick to end the week. So we are seeing some profit taking occurring, and it's not clear. There's definitely some choppy action going on, but the bears have favor, in my opinion, just because we are so overextended and weekly consolidation is due. The question is going to be, do we see sideways consolidation this coming week and just another inside bar, which is absolutely possible, or do we get that final break of 415 to let us know, okay, this is clearly weekly consolidation, and we're looking down at 4 psychological after that. So we'll see if the bulls are able to maintain 415 support, and the most important short-term resistance we're looking at is 460. So still very wide ranges, trading within a 10% range in just the last few 4-hour candlesticks, but keeping an eye on DGAS because of the way the momentum has shifted, and because we didn't get any follow-through on that last bull break. We just saw a bounce and another lower high, and we'll see if that drops down to a lower low. So UWT and oil has my attention. Natural gas, watching for, I would like to see one more weekly inside bar because that means the break will be more clear and we should get some more follow through once that break does occur, the tighter we get. And of course, watching the overall market correlation to oil to see if the bounces can coincide. I appreciate you watching. Hope you have a good rest of your weekend, and we'll see you soon.